So right off the top, we got to talk about the Fed. They just came out with their decision. They decided to pause, but do you guys think that was the right decision or no? Was the pause the right choice?
I think how many reports until we see a trend? how many reports until we actually get a full reading of the data? I mean, they did say that they're halting the rise of rates, but then again did mention that they're going to be raising them up perhaps still. So it's like, what type of message are you trying to put out to the markets? Because as we know, as soon as that Jerome Powell said this is not our base case to do a soft landing, the market sold off. So
right,
here we go again.
And this is something I know I brought up in Monday Mortgage Minute too. It's like, well, if you know you're going to have room to make a rate hike later, like in the November meeting, well, then just make it now. But I think the hesitation is if they made that now and then it caused potentially more damage long term, they're also kind of leaning on that, creating a best case scenario for themselves to kind of wiggle into a solution that they can craft to tell everyone looks good.
I think it was just advantageous for them, but I'm with you. They should have just done that. Let's get it over and done with, and let's just keep moving forward. But I think the Fed, Mr. Uncle Powell, just wanted to say, hey, I just want to not raise the rate for the second time this year. I think that's what it was more of a bragging right, maybe.
Well, and everyone and all the Fed members saying that they see that there's room for 2 more rate hikes kind of leaves us with the conclusion that, well, then there's one coming in November. So it's kind of like this catch-22. It's like, well, if there was enough room in the tank to go for 2 more rate hikes and then you didn't do it last meeting, you didn't do this one, well then, okay, you're signaling that we're going to have one in November, which again, then that begs the question, why are we waiting longer than to just let that happen? Because even in the notes yesterday, they cite that they're going to see all these lagging indicators finally make their way through the economy and then make determinations based on data on what they need to do next.
Yeah. So one of the biggest things that I did read up in one of the articles was that the information for housing always lags. So that's still something that they're waiting for to be able to see. And hopefully by November, we get the numbers that we're looking for so that they either make a right decision and raise it up or, maybe a third consecutive halt, which, it's hard to tell because of the fact that inflation is still running up. We're still not near our, targets of 2%. And a lot of that has to do as well because housing and energy is not included in that.
Well, yeah, you're talking about core readings. Yeah. Core reading strips out the food and energy.
Yeah, so, which is the most expensive.
Yeah, I mean, the overall shelter cost is a general problem when it comes to the inflation reading as a total, but specifically those things are lagging because they are, some things, like we've talked about before, are indirectly affected by the Fed's monetary decision. Some are directly affected. And those things that are indirectly affected take longer than those that are directly affected. So I think that's part of it. I wanted to read this part that they, from the statement itself is, in determining the extent of additional policy firming that may be appropriate to return inflation to 2% over time, the committee will take into account the cumulative tightening of monetary policy, the lags with which a monetary policy affects economic activity and inflation, and economic and financial developments. So that sounds like a lot of different things. They are, but they're also very similar, and there's a lot of things interwoven in between those things. So
Uncle Powell just stayed the course, like he said he's going to do in the last meeting, and so there he goes.
Yeah. We're going to continue to keep our eye on core inflation readings, which Brian was just talking about core right now. The pace at which new jobs are adding to the economy, and that is slowing. Job openings and unemployment are cooling a little bit. But again, we're still far off that target from that 4.5% they'd stated they wanted. And that was a public chart they shared earlier this year.
Yeah.
So we have yet to see that. And, I know, Mikey and I were talking about this the other day, like that 10-year yield is already flying and now surpassed what Mikey had taught us about 2 shows ago, which was this 4.3 kind of marker. I mean, and now it's trading past that.
Yeah, I think this was a nice move that they didn't raise the rates again. But like Brian said, because we haven't seen any trends, I think anything they put out right now, we just got to take it with a grain of salt.
Yeah, 100%.
Yeah, so inevitably what that means for the mortgage market, for all you watching the show for the first time or learning about us for the first time, mortgage rates for the 30-year fixed loan and the 10-year yield do have a very strong correlation, even though they are not exactly tied. They do have a lot of historical correlation to one another. So when you see that 10-year yield go up past 4%, past 4.25%, up to maybe even 4.5%.
No bueno.
That is bad for mortgage rates. They continue to go up, which then now tips back into something we talked about before too, which is, are we going to see 8% rates? What do you guys think?
Yes.
I believe so.
You think we're going to see 8% this year? Okay, that's a yes across the board.
Yep.
Yes across the board.
Yeah,
okay.
most definitely.
I mean, we already saw the change yesterday alone. Yeah. Even though they said that they're not going to increase the rates, we already saw the change in it. The market didn't take it just took like a grain of salt, like Mikey just said. nope, we don't care. Market's just going to still dip. And it's just everything else that Uncle Powell says.
Yeah. And I think that there might be some case to be made for people who are waiting or who are, let's say, in this conversation, but on the sidelines or on the fence of deciding what they're going to do in housing. Okay, now I know what's happening and I see it, even though we've kind of been seeing it along the way, but now they made this other pause and they're leaving only room in the tank for one more. Maybe that would be a case for someone to go, okay, cool, I'm going to find my entry point in 2024. I could see that happening.
I also heard an argument that says there's going to be a slight dip in November where it might bring a few buyers out to the market because of the fact that people that do need to really sell by the end of the year or basically just need to cash out on their equity. I think that we might be able to see a small spike in buyers towards the end of the year because of the fact that also whenever the Fed says that they're not raising rates or say about like them kind of halting rates, it does give the consumer's mindset that, maybe rates are going to come down. So therefore the following week, we might expect for applications to go up because of the fact that it didn't seem too negative if you're a consumer, but if you're an investor and you're in the markets, you know exactly what they mean.
Yeah, good point.
That's a great point. And I didn't tell you guys this, but I was actually having a conversation yesterday with my business attorney, and he was saying that this is a time of year when people who need to try to sell a business or close a business need to do it now because there's certain formalities that have to conclude before the calendar turns into the new year. Even if the business closes on January 1st, or let's say the first day open, which would be the 2nd or whatever, that technically is a new year and that business is still open, which then it is required to do all the same things a business has to do in a new year. So even just by default standard, whether it's real estate or not, and in this case, if it is, then people who are looking to offload properties and it's in their LLC or whatever entity they have set up, that might be a time when they have to take that opportunity now to get the house in the market and try to sell it.
Ooh, so do you guys think we might see a lot of the Airbnb investors start to, put some houses on the market? I don't know, guys. What do you think?
Well, see, what's crazy is one of my realtor partners actually shared this information. Last year, in this year, currently we have like 3,000 homes for sale, but there's 8,000 Airbnbs just here in San Diego.
What?
Yeah. So,
where are they?
Wait, what?
Yeah, but they're not selling, right? So as soon as they start putting more restrictions and stuff like that, maybe we'll see a little bit more homes on the market.
Wow. Yeah, I know that Airbnb's actually been leaning into AI a little bit to help figure out what people are actually intending to use the rental reservation for, to try to curb partying and some other things. That's maybe for a different show, but I just saw that cross my desk this week and I was like, okay, flag that one, come back to this and read about that later, because they actually employed somebody whose specific job is to help trim that down so that there's not so much that happening, because people are losing money and there's problems in communities and neighborhoods and damage to homes. So. All right. Well, the Fed did what the Fed did, guys. So one thing I just want, final thought on the Fed, it has to do with Lawrence Yun, who's the chief economist for NAR. He said the Federal Reserve is rightly on pause and is looking for more data before determining its next course on interest rates. So here's my question, Lawrence. I know we don't know each other, but I'd like to ask you this question. Will you agree with the Fed if and when they hike their rates in November as well? Because if you're saying the pause is okay now, are you going to say that the rate hike was appropriate in November too, or not? What do you guys think?
I think he's just trying to get some clickbait here.
I don't know that the chief economist for NAR is looking for clickbait, but okay.
No, I honestly feel like, if you think about it, he's from the National Association of Realtors, so his optimism is going to be like, hey, yeah, if they do bring down the rates, it's going to be good. If not, he's going to try to swing it in a way where I feel it's going to have a positive connotation to anybody that's listening.
Well, and he's taking a position here too, because he followed up with saying, like, with fewer job openings, slower job gains, and softening core consumer price inflation, the Fed must consider the potential economic damage arising from any future rate hike. So he's kind of putting maybe a stick in the sand a little bit and going, I don't think you guys should. It's a little bit of a hint over there, like, hey, don't do it. But I'm curious to see if they do the rate hike, if he's also going to get behind that or not, or if he'll just criticize it.
And I mean, where's all my first-time buyers at? How are you guys doing? How are you guys holding up? I feel like they're getting squeezed out. The mortgage rates are not helping them at all. And as you saw right here, they're the biggest ones that, come at a loss when the rates keep getting spiked up.
That's right.
Yeah.
To Brian's point, if you're a buyer out there, you're an aspiring homeowner, and you need help, and you're trying to figure out where you fit in this entire conversation, drop a comment below. You can DM us or reach you guys directly, and we'll be able to help you out and get you qualified and see where you fit in this whole real estate game.
100%.